Today we're joined by Andreas Antonopoulos, who's a renowned speaker and crypto financial evangelist, the author of Mastering Bitcoin, a co-host on Let's Talk Bitcoin, and the founder and CTO of Third Key Solutions. Andreas, thank you so much for joining us.
Eric, it's a pleasure. I'm really excited to be on the show.
Great. So a few years ago, you sort of became pretty popular. A lot of people listened to what you were saying. They would go to every talk you were doing. What do you think it is that draws people to what it is that you say about decentralized technology and Bitcoin in general?
Well, to tell you the truth, at first I have no idea. I was as surprised as anybody else that happened. I've been a public speaker for more than 20 years now, so I see public speaking as a professional skill that I've worked to develop over a very long period of time, long before Bitcoin came along. And when I got involved in Bitcoin, I realized that I'm a coder, but I'm not the best coder, and I'm not a professional full-time coder. And there are people who are much better at doing that. And so the skills that I could bring to bear on Bitcoin were primarily my public speaking and essentially words. That's my tool. So writing the book and doing public speaking were the way I thought I could best contribute to the community. And so I just started doing it. I didn't ask anybody. I just started showing up and doing interviews and calling journalists and things like that. And it snowballed from there. And I was just as surprised as everybody else that I reached the level of popularity that I did. I don't expect that necessarily to last. I wouldn't be surprised if I get replaced by someone else in the future. But as long as people want to keep listening and will come and see me talk, I'll keep going and I'll keep doing it.
Eric was observing earlier to me that you've been sort of less in the public eye of Bitcoin lately. And I don't know if that's true. You've been on Morgan Spurlock's show. You've been obviously promoting Mastering Bitcoin. But what kind of projects have been sort of taking up your time in the past few months and have been engaging you?
Yeah, I think I've been less in certain forums, so I spend less time on Reddit and exposing myself to the trolls there. But I can tell you that my media schedule hasn't slowed down. I'm doing a lot of community meetups, so I do a lot of Skype connections where I show up in recently Seoul, South Korea, Fargo, North Dakota, and various other places like that that have small communities for Bitcoin, and I'll go and speak there. And I'm still doing a lot of media work with more mainstream organizations and conferences. I've been working on a bunch of projects behind the scenes. Third Key Solutions was obviously one of the big projects I was involved in. So bringing multi-signature key generation, storage, recovery services, and consulting to this industry, and trying to develop the space for multi-signature, which I think is really important. I've been doing a lot more coding, still working on the book, had 3 print editions come out so far with various improvements and fixes, and I'm getting ready to start writing the 2nd edition. Moving on that, I have another book in planning, in the planning stage, and yeah, there's just the same stuff day in, day out.
Can you go a little bit more into what you mentioned with multi-signature security, and just explain it a little bit to any of our listeners who might not be involved, and go into a little bit about Third Key Solutions and what that is all about?
Sure, absolutely. Well, multisig is one of those really incredible features that didn't even exist in the beginning in Bitcoin. Was introduced in 2012. It's a signature it's a feature by which you can have a transaction pay into an address that's locked or controlled by multiple signatures. So that, for example, you have 3 signatories, and it takes at least 2 to approve spending from that specific address. Now, this technology is seemingly very simple, but what you can build with it is pretty astonishing. There's another technology that goes hand in hand with multi-signature, and that's hierarchical deterministic wallets, or deterministic wallets, which are basically wallets that allow you to start from a simple seed made of 12 or 24 words, and then generate near infinite amounts of addresses from that. And if you combine the two, you create hierarchical deterministic multi-sig wallets, which basically allow you to have a near infinite amount of multi-signature addresses. Now, this technology is ideally suited for use in Bitcoin exchanges, in Bitcoin wallets, in hardware devices, and things like that, where you want to give users control over keys, but at the same time have the ability to offer them various additional solutions, like, for example, policy-based velocity controls. You can say, if you want to spend more than $1,000, we're going to send you a text message that you have to confirm, and that will protect from someone stealing from your wallet. So combined with this feature called oracles, where you have a third party acting as a signatory, you can add a lot of really interesting security features to wallets and put users in control. More importantly, that allows exchanges or wallet providers to not have custodial control over funds, which is a huge risk, both for external theft, but also creating kind of incentives for internal theft, embezzlement, etc. And so in many of these schemes, you'll have the user control one set of keys, and a provider might control a second set of keys, or use an oracle to provide velocity controls, as I mentioned before. And then usually the user will be asked to take a third key and store it somewhere securely. And the idea is that if ever the provider goes out of business, or the exchange goes out of business, or there's a problem, the user can independently, using the two keys, gain access to their funds no matter what happens to the provider. The problem with that model, of course, is that your average user, if you tell them, here's a third key, store it somewhere securely, that's not easy. It's in fact very difficult to do. A lot of the things that you would do to store a key securely will also make that key less likely to survive a natural disaster or a problem. So users find it very difficult to get this compromise between resilience, availability, and security in such a way that the key is secure, but at the same time it's available. Let me give you an example. I mean, what do most users do if you send them a PDF with a separate key to store securely? They take a screenshot and put it on their phone. They put it on their desktop under notmybitcoinstash.jpg. Don't look here. They print it out and store it somewhere, but then it's vulnerable to theft, fire, flood, loss. In extreme cases, someone who's sophisticated about this may make multiple copies and put one in a safe deposit box. But most users are not that sophisticated. And if you're doing this for a company, it becomes really difficult to achieve solutions like that. So if you're a company and you're trying to do this, if you put your key in a safe deposit box, then who has access to that, under what conditions, et cetera, et cetera. Third Key Solutions is basically designed to solve these problems. First of all, to advise companies how to set up multi-signature schemes, but then to act as an independent signing agent that is jurisdictionally, organizationally independent from the provider or from the user, and be able to guarantee that those keys will be available, that they're stored securely, and that they will be available in the case of a loss or natural disaster to recover those keys. And by using a multi-signature scheme, we also don't have any control over the funds. So a single signature isn't enough to do anything. And that means that we can step in the case of an emergency, but we're not a point of vulnerability for the funds. And that's really the bulk of our business. We have a number of clients, more to be announced very soon, in fact. For example, Case Wallet, which is a hardware-based wallet with a built-in GSM 3G chip and a fingerprint reader, which allows you to spend Bitcoin. Well, each of those devices has a key within it. The provider of that software and hardware solution has a second key to provide policy controls. And Third Key Solution holds the third key, so that even if the provider goes out of business, we can help individual users recover. Or if a user loses their hardware wallet, we again can help recover the funds. And this ensures that the provider doesn't hold both keys and therefore have custodial control. And we have that organizational independence to guarantee it.
So it's really interesting how just technically complex a lot of these subjects are.
Yes.
For the average, person in the world who may or may not even be aware of Bitcoin, or let alone how asymmetric cryptography works, it becomes a very challenging topic to approach.
Right.
What is the compelling case for these types of technologies for someone who doesn't quite understand it yet? Why should they be interested in this stuff?
Well, we're not appealing to end users because quite honestly, end users for the most part, are not sophisticated technically enough to use private keys, to control private keys, to store private keys securely, and to practice the operational security that's needed. So what we are seeing happen, and we think will continue to happen, is hiding those features essentially and making this operate behind the scenes. So now the question is, there are two ways to do that. One is to take the responsibility and control completely away from the user and essentially take custody of their funds. We have a word for that. It's called banking, and it leads to banking failures like Gox. And so the problem with custodial control over funds is that it violates the fundamental principles of Bitcoin. It exposes users to other risks, counterparty risks that they didn't have before. And so what we're really looking at is this solution where you can both have the user in control, have no other organization have majority control over their funds or custodial control over the funds, but at the same time be able to hide the presence of the key, to make it invisible to the user, and give them a level of security behind the scenes that they don't really need to understand how it works. For the same reason that most users don't understand how SSL works, most users don't even know what SSL is. But as long as that little padlock turns on and more websites do it, that delivers a level of guarantee. Now, if you understand how that system works behind the scenes, there's certificate authorities that do various background checks and have processes for expiry and revocation of certificates, et cetera, et cetera. We're doing something very similar in the multi-sig space on the basis of a new technology. But from the perspective of the end user, this is invisible. A user who uses a case hardware wallet, for example, their primary authenticator is a fingerprint. And beyond that, they don't even know that their device has one key or that their provider doesn't have two more keys and therefore able to take their money away. But the sophisticated users who ask that really important question, why should I trust you and what can you do with the remaining keys? The idea of having an independent third party control the third key is really important because it provides for this type of decentralized control, which is the essence of Bitcoin.
So Andreas, in much of your work outside of third key solutions, you're kind of addressing a different audience, sort of the average person who may be slightly more interested in sort of topics around maybe privacy or maybe economics, finance. How do you balance in your work life your evangelism with your building, basically, with building third key solutions, with working on these kind of more expert specialist fields?
Well, I mean, it's the same as the difference between the book that I wrote, Mastering Bitcoin, which is not really designed to be read by a mainstream audience. You can probably wade through the first two chapters if you're not technical, but beyond that, it's written for programmers, it's for software developers, and it's published by a technical publisher, O'Reilly Media. It's under an open source license. You can find it online. All of those things have nothing to do with a mainstream audience. I try to keep the work that I do in terms of media and evangelism very separate from either the book or the work I'm doing for Third Key Solutions or any other work I'm doing behind the scenes in Bitcoin and other cryptocurrencies and the advice I give other clients. So when I go and speak in public to mainstream audiences, I don't use the opportunity to promote my book or use the opportunity to, shill for any of my clients or third key solutions or anything like that. I think it's important to keep that barrier. I go to basically convey my passion and enthusiasm for Bitcoin as a technology to people who've never heard it before. And if the skill I can bring to bear for Bitcoin is being able to take a technical topic, understand it well, but then be able to explain it in very simple terms, then I'll keep doing that.
Actually, we have a couple questions here from the audience that came through, so I wanted to go to one of those. And this one is from John Ratcliffe. I'm going to actually quote exactly what he said. He said, "Do you believe the scalability of Bitcoin will happen through off-chain solutions? And if so, do you believe these off-chain solutions must also be decentralized, peer-to-peer, and with the same features and protections of Bitcoin itself?"
Well, that's a loaded question in this in this particular environment. With there's for those who are not familiar, there's a massive debate going on at the moment in terms of how scalability can be achieved in Bitcoin, and the participants in this debate have split into two camps that are. In many cases being quite nasty to each other, but we've got small blockists and big blockists, and each side will tell you that unless something is done urgently, the other side will destroy Bitcoin. So nothing less than the stake of the future of the world is, is at stake here, which I find hyperbolic to say the least. From an engineering perspective, Bitcoin scalability, as with any other software system and protocol, is a matter of incremental change. It won't happen with one thing, it will happen with many things at the same time, and very few problems are fundamentally intractable or unsolvable. I don't think Bitcoin has any design flaws, if you like, that make any of the scalability problems intractable. So the answer is Bitcoin scalability will be addressed simultaneously by potentially changes in the block size limit through a hard fork in the near future, through off-channel and off-chain payment solutions, be that point-to-point payment channels or point-to-multi-point payment channels through Lightning Network, side chains, off-chain transactions as Coinbase or ChangeTip do, and a myriad of other solutions that we've barely imagined. It's both too early to worry about those things and really too early in the maturity of the technology to see what solutions will come out. I think we do have a scalability issue coming simply because if Bitcoin continues to exist, it is successful. So Bitcoin's success is simply continuance, survival. Every year that goes by that Bitcoin exists, it doubles its projected lifetime. So if you take, this is Lewis' law, if you take a 6-year-old cryptocurrency, the fact that it has existed for 6 years means that there is a very high probability that it will exist for at least 6 more. And every year that goes by and Bitcoin survives, its lifetime becomes longer and longer. It becomes more firmly established. Secondary benefits like the permanence of the record become even more valuable as more time is piled on. And all of these things feed into each other. And so we do need to change some of the scalability issues or address some of the scalability issues now. And part of the reason for that is because if there is a sudden influx of new users or a sudden influx of capital with people buying Bitcoin, and the scalability isn't there, that's going to lead to some capacity problems, which may cause a hiccup in adoption. I think you never know when these events will happen, and you never know when they're going to come or where they're going to come from. But we're seeing, for example, in China, 4 million people opening brokerage accounts per week. With numbers like that, all it takes is a single little rumor that Bitcoin is about to do something interesting, or that Bitcoin is something that people should invest in, and you could see an influx of cash into Bitcoin from China that quite honestly we can't sustain. And I think that's pretty much what happened in November 2013. Now keep in mind, I don't think that's a good thing. I don't think adoption by speculators looking for get-rich-quick schemes and suddenly flooding money into Bitcoin is a good thing. I think it destabilizes Bitcoin, but nevertheless, it may happen. You can't stop it from happening, and it may happen unexpectedly. So long story short, there is no one solution to scalability. Scalability is something that will be addressed in many, many different ways, structurally, architecturally, in the protocol, in additional protocol layers above the protocol, in sidechains. All of the above will be required to scale Bitcoin over the next 20 years, and I think we'll see a lot of different solutions emerge.
So you mentioned China, and that raises another very interesting discussion point surrounding the scalability question. One of our listeners, Evander Smart, has asked, what's your sort of assessment around the centralization that might happen as a result of a block size increase towards the China mining and exchange groups?
Um, I don't think that centralization is a necessarily predictable outcome of a block size increase. It may reduce the profitability of some of the mining centers in China, but they already have a compelling advantage because of inexpensive electricity and low regulation over inexpensive electricity, which means that that creates an enormous subsidy. So if that was balanced by effectively a negative effect on bandwidth because of the low bandwidth and high latency that you see on links in China, that would arguably also enable the rest of the world to be as profitable as the Chinese have been. So what we've seen right now is a centralization of mining in China because of electricity subsidies. And arguably, if there is the opposite effect because of bandwidth, you may see decentralization and a greater part being played by, for example, geothermal, hydroelectric in Canada and Iceland and other places like that, and the leveling of the playing field. And you can't really predict these things, but I think the centralization bogeyman, because it's such a strong principle that so many people in Bitcoin are really passionate about, becomes the crux of this debate, and each side will accuse the other of being evil centralizers, which is really not an engineering argument. It's a prediction, and a prediction that you really can't model because there's a lot more variables you can't control in such a thing. So I think we let the market, I think we let the dynamic difficulty adjustment and mining algorithm play out, because so far what I've seen is that Bitcoin is far more resilient than people think, and that concerns about centralization and 51% attacks and centralization of mining pools that we had last year, everybody was freaking out over Ghash.io. Ghash now has 3% of the hash rate. So a lot of these fears end up being played up, and then in hindsight we see that it wasn't such a big deal, that the network adapted, that the markets adapted, and what everybody was worrying about came and went with no big deal. I don't see why that would change. I am much more trusting in Bitcoin's dynamic ability to adjust, and the self-interest of all of the people who are invested in hardware and software and startups and in all of the ecosystem around Bitcoin to protect it from these adverse effects.
It's a great irony of this, and something we really enjoy kind of digging into is the spontaneous order that seems to emerge even in a decentralized network like this, or a distributed one. But while we're on the topic of Bitcoin development, we wanted to ask you, are there any Bitcoin improvement proposals, or bits as they're called, out there now which are exciting your interest, or which you feel have some particular merit for the future of Bitcoin's development?
Okay, there's a lot. I think
It's true.
it takes about a year to a year and a half before you see something going from a BIP to wide-scale deployment. So I think the industry is really now coalescing around BIP32, which is the hierarchical deterministic wallet, and around multisig. I mean, those two technologies are really 2012 technologies, and it took almost 3 years to see them start to appear in the majority of new wallets that are being created, and starting to see support infrastructure and companies coalesce around that. So what other things are looming in the background? BIP 43, 44, 45, which are various hierarchical deterministic path structures for doing multisig and doing various purpose-specific and multi-currency things. I think those are very interesting. We've seen a lot of people experiment with them. I think we're beginning to see products come out that take advantage of that. For the future, I'm very excited by payment channels. And I don't think there's actually been a BIP for the payment channel implementation that we see in Bitcoin J. And yet it's been implemented primarily because it's not It's not a new standard per se. It's really more an implementation artifact of two existing technologies, which are multisig and lock time. So what's coming in the pipeline? Check lock time verify and relative check lock time verify based on input sequence numbers, I think is really, really exciting technology, being able to do per input lock times. This basically, to explain to a more mainstream audience, what this allows you to do is to post-date a Bitcoin transaction. So if you post-date a Bitcoin transaction, it's like post-dating a check, but the difference is that this is based on a consensus rule that is inviolable in the network, which means that you are guaranteed that no one can cash this transaction before the post date. These new technologies allow you to do some very interesting things, such as collecting inputs from various parts of the transaction and dating them differently, or allowing the sequencing of transactions where the post dating happens as a relative time to the inputs that are coming in. What this can do is it can take payment channels to the next level. It can enable a number of different second order features to emerge because you have this flexibility. It's something I'm going to be talking about in my upcoming appearance in London, which is this idea that these trust primitives that we have, multisig and lock time, transaction verification, 10-minute block time, all the heartbeat of Bitcoin, all of these things are essentially trust primitives that are guaranteed by the consensus rules. They form a language. With that language, you can now form sentences, almost like an algebra, by combining the basic operators. And payment channels are a great example of combining multisig and lock time to create something completely new, a micropayment system. But we haven't finished because the magic thing about an algebra or a language that has syntax is that if you have the basic building blocks, operators, or if you want in a language case, verbs and nouns, the number of sentences you can create is infinite. And so innovation in Bitcoin is happening at two levels. On the one hand, we're inventing new verbs and nouns. On the other hand, we're then finding new ways to recombine the existing verbs and nouns into exciting new sentences. That's some of the things. I think the other interesting BIP for me is the bitwise block version the bitwise block version BIP, which basically means that the block version number is no longer simply an incrementing integer. We've gone from block version 2 to block version 3. But instead it's a bit field, which would allow for the deployment of multiple soft fork and possibly even hard fork features in parallel with voting thresholds and activation thresholds for miners. So if you've been following the block size debate, that's actually one of the things that ended up getting implemented in Gavin's proposal, even though it was a very new thing and could play a role in the block size increase, which is assigning specific bits within the block version to activate and gather consensus around that change. That's going to be really useful because it allows for more complex, phased, incremental changes. One of the things I've been concerned about in Bitcoin, and I've talked about in the past, is that as the protocol gets embedded in hardware and gets embedded in more and more devices that run unattended and don't take upgrades very easily, this leads to ossification. We're beginning to see already that it's getting harder and harder to push changes through to the core protocol. Imagine what happens if, say, 21E6 is successful and 1 million toasters are running nodes, and none of those can be upgraded because they don't have a network connection. You're basically locking in Bitcoin versions, and that means that gradually the innovation is going to have to move to the layers above. So the BIP that allows for bit sequencing of block versions actually could offer some interesting solutions there. Let's see. Proof of payment is another BIP that I think is fascinating. Proof of payment allows you essentially to create a mock transaction that proves that you can pay in the future but have not, but is not valid as a transaction itself. It's a commitment to a future payment that can have a rigorous proof to it and can be subject to the consensus rules that you can independently verify and validate. That is really interesting because that means that without escrowing money, without committing money to a post-dated transaction, you can effectively prove that you have the funds under your control, which could be used for a future escrow or something like that. And again, I look at each one of these things as a trust primitive that could be recombined into more complex features and capabilities by all of the incredible innovating companies out there in the ecosystem.
Well, Andreas, our time is pretty much almost up. We just wanted to give you a chance to plug all of your projects that you'd like to, including Mastering Bitcoin, which we didn't even have a chance to go into. Tell us a little bit about what you're doing there and how your real position as probably the most notable person in the Bitcoin space has really helped the book and all these other projects you're with.
Well, the book was really a very simple idea. If you accept the premise that Bitcoin is a powerful technology that has real utility and can change people's lives, then the next and most important question is, how do you get that knowledge into as many brains as possible, as quickly as possible? And if you also accept that this is a matter that will very seriously affect and impact developing nations, then you want to get this education and information out to as many people as possible. When I was looking to learn about Bitcoin, of course, I found that the information was scattered in many different sources, but there wasn't one definitive guide that covered all of the basic insides or intricate details of how Bitcoin works in a single book. Of course, that's slightly audacious to claim, and that book is both never complete and never correct. But it is a start. And there's two things I wanted to emphasize about the book. First of all, you can go out and buy it, and that would be great, fantastic. I like getting paid for my work occasionally. I do most of it for free. But if you buy it, thank you so much. I really appreciate the contribution. It was quite a lot of work. But honestly, if you know anything about publishing, I'm never going to really make much more than minimum wage on that. The book is also, and this is really important, is also available under an open source license. And this has two effects. First of all, it's licensed under Creative Commons CC by SA. O'Reilly is the kind of publisher that is very open to open source, and they were very happy to change the license to an attribution share-alike license once the book showed that it could sell. And what that means is two things. One, you can go on GitHub, you can download the book, and you can read it for free. And that's really important because there's a lot of developers around the world who simply can't afford a $34 book or a $25 ebook in order to learn about the new technology. And so the ability to make sure that that information is available for free was really important. But the second thing that's even more exciting about that is that this license allows for derivatives and transformative work based on the book, meaning that if you want to use it for a course curriculum as a textbook in a postgraduate or graduate degree, as something to base an online course or to use materials for some kind of tutorial or MOOC, then you can go ahead and do it. And more importantly, you can also change the language. So I would like to draw attention to the fact that Mastering Bitcoin is on Transifex, which is a translation crowdsourcing platform. And thanks to the efforts of 125 or so volunteers, it has now been fully translated into Hungarian. The Japanese, French, and Spanish translations are more than 90% complete. And there are 28 other languages in progress. This book is getting translated into Arabic, Mandarin, Turkish, Greek, Italian, Spanish, German, French, Thai, Vietnamese, Korean, and I'm probably forgetting half a dozen other languages. It's really exciting, and this is entirely a volunteer effort. Most importantly, this can be republished by any publisher in the world in any of these languages under the terms of the license, so they can commercially promote it, sell paper copies. But each one of those versions, translated versions, is also free to read, free to share, and will always be open source. So if you're interested in that effort, I would love to get more volunteers to contribute to that effort and translate it as many languages as possible. If you think of Bitcoin as a meme, then if you think of Bitcoin as a meme that's revolutionary, this is the Software Guerrilla Handbook. and we need to get it into as many young minds as possible, in as many countries as possible, in as many languages possible, in order to put some real grassroots volume behind this effort.
We totally agree, and that's the reason we started the decentralized show. So,
Yes.
first of all, thank you again for joining us. But we have one final question.
Please.
What is it about decentralization that matters to the average person in the rest of the world?
It's simple. One word: justice. You can't have justice with an imbalance of power. You can't have justice when you're powerless. And to me, that's really important because it ties into another topic that I'm very passionate about, which is peace. And peace is not the absence of war; it's the presence of justice. And so, therefore, decentralization, the diffusion of power to as many people as possible, avoiding the concentration of power that leads to corruption, leads directly to a more peaceful world, a more just world. And I think that network-based technologies are one of the things that have happened this century that really offer tangible results for peace and justice around the world. And Bitcoin is one of them.
As always, Andreas, a very enlightening and inspiring conversation. So thank you for joining us.
Thank you so much for your time, guys. Thank you for having me on the show, and I look forward to doing this again.
Absolutely. We'll have you on again for sure.
Of multi-signature addresses. This technology is ideally suited for use in Bitcoin exchanges, in Bitcoin wallets, in hardware devices, and things like that, where you want to give users control over keys, but at the same time have the ability to offer them various additional solutions, like, for example, policy-based velocity controls. You can say, if you want to spend more than $1,000, we're going to send you a text message that you have to confirm, and that will protect from someone stealing from your wallet. So combined with this feature called oracles, where you have a third party acting as a signatory, you can add a lot of really interesting security features to wallets and put users in control. More importantly, that allows exchanges or wallet providers to not have custodial control over funds, which is a huge risk, both for external theft, but also creating kind of incentives for internal theft, embezzlement, etc. And so in many of these schemes, you'll have the user control one set of keys.
Today we're joined by Andreas Antonopoulos, who's a renowned speaker and crypto financial evangelist, the author of Mastering Bitcoin, a co-host on Let's Talk Bitcoin, and the founder and CTO of Third Key Solutions. Andreas, thank you so much for joining us.
Eric, it's a pleasure. I'm really excited to be on the show.
Great. So a few years ago, you sort of became pretty popular. A lot of people listened to what you were saying. They would go to every talk you were doing. What do you think it is that draws people to what it is that you say about decentralized technology and Bitcoin in general?
Well, to tell you the truth, at first I have no idea. I was as surprised as anybody else that happened. I've been a public speaker for more than 20 years now, so I see public speaking as a professional skill that I've worked to develop over a very long period of time, long before Bitcoin came along. And when I got involved in Bitcoin, I realized that I'm a coder, but I'm not the best coder, and I'm not a professional full-time coder. And there are people who are much better at doing that. And so
with multi-signature security, and just explain it a little bit to any of our listeners who might not be involved, and go into a little bit about Third Key Solutions and what that is all about.
Sure, absolutely. Well, multisig is one of those really incredible features that didn't even exist in the beginning in Bitcoin. Was introduced in 2012. It's a signature it's a feature by which you can have a transaction pay into an address that's locked or controlled by multiple signatures, so that, for example, you have 3 signatories, and it takes at least 2 to approve spending from that specific address. Now, this technology is seemingly very simple, but what you can build with it is pretty astonishing. There's another technology that goes hand in hand with multi-signature, and that's hierarchical deterministic wallets, or deterministic wallets, which are basically wallets that allow you to start from a simple seed made of 12 or 24 words and then generate near infinite amounts of addresses from that. And if you combine the two, you create hierarchical deterministic multisig wallets, which basically allow you to have a near infinite amount. The skills that I could bring to bear on Bitcoin were primarily my public speaking and essentially words. That's my tool. So writing the book and doing public speaking were the way I thought I could best contribute to the community. And so I just started doing it. I didn't ask anybody. I just started showing up and doing interviews and calling journalists and things like that. And it snowballed from there. And I was just as surprised as everybody else that I reached the level of popularity that I did. I don't expect that necessarily to last. I wouldn't be surprised if I get replaced by someone else in the future. But as long as people want to keep listening and will come and see me talk, I'll keep going and I'll keep doing it.
Eric was observing earlier to me that you've been sort of less in the public eye of Bitcoin lately. And I don't know if that's true. You've been on Morgan Spurlock's show. You've been obviously promoting Mastering Bitcoin. But what kind of projects have been sort of taking up your time in the past few months and have been engaging you?
Yeah, I think I've been less in certain forums, so I spend less time on Reddit and exposing myself to the trolls there. But I can tell you that my media schedule hasn't slowed down. I'm doing a lot of community meetups, so I do a lot of Skype connections where I show up in recently Seoul, South Korea, Fargo, North Dakota, and various other places like that that have small communities for Bitcoin, and I'll go and speak there. And I'm still doing a lot of media work with more mainstream organizations and conferences. I've been working on a bunch of projects behind the scenes. Third Key Solutions was obviously one of the big projects I was involved in. So bringing multi-signature key generation, storage, recovery services, and consulting to this industry, and trying to develop the space for multi-signature, which I think is really important. I've been doing a lot more coding, still working on the book, had 3 print editions come out so far with various improvements and fixes, and I'm getting ready to start writing the 2nd edition. Moving on that, I have another book in planning, in the planning stage, and yeah, there's just the same stuff day in, day out.
Can you go a little bit more into what you mentioned